Well, I think we want to just spend 2 minutes talking about the GDP numbers and how to interpret it for those of you who are wondering what this means now for the monetary path, etc. as well. But Latha is here with exactly that. Latha, over to you.
Well, the GDP numbers are stunning. No taking away from that 8.2%. It gives a first half average of 8% because Q1 we got 7.8. And individual verticals, like for instance, manufacturing and services, both of them have fired at 9%. Within services, you have, a big sector called finance, real estate, insurance. That one's grown by 10.2%. Government services, public administration, health, education, defense, that category has grown by 9.7. I mean, these are all very good numbers. You want to look at GDP from the expenditure side. Are you spending it on investment or consumption? Both have done well. Consumption has grown 7.9%. Investment, or what you call gross fixed capital formation, 7.3%. It's extremely difficult to argue against these numbers. And that is reflected in the fact that almost all brokerages are now upping their full year forecast. I just give you a sample. SBI and Kotak have pulled it up to 7.8%, HDFC Bank to 7.3%, ICRA to 7.5%. So across the board, this is the full year number, okay? 8% is the first quarter, so people are expecting the current quarter also to be very good because of the GST-led consumption. So where is the worry? The first worry is, as you know, nominal GDP. You count many things in today's prices and then you deflate it. So this nominal GDP is what is seen in corporate earnings, because there you don't have a distinction between how many goods and services extra were produced, how much was it because of prices. You just get the profit number. So if the nominal GDP is growing at 8.7, it can depress earnings. What was the Nifty EPS growth? It was like 2 to 3% in second quarter. That is where we are talking about a nominal GDP of 8.7. But then again, mid-caps grew at 30%. So, there is confusion as to what really this nominal GDP can do to earnings. The second worry is this 8.2 very reflective? Because like I told you, about 40% of GDP is counted in real terms. How much iron and steel was produced, how much crops were produced. There is no problem of prices. But something like finance, broking, insurance, health, education, you take the current prices and then you deflate it. You only have a WPI number, which is about, for services, they've taken about 1%. Now, we all know that services, school fees, tuition fees, how much those have risen. So there is a kind of a disbelief. Is our real GDP really 8.2? Maybe it is a little less. The third worry is, of course, what will the Reserve Bank do? Can you really go to a rate cut when the economy is firing at perhaps the fastest growth in decades? When did we last see, 8.2 and 8.1, probably between the 2004-2008 period? So that is not a rate cut. Those were rate hike periods. Should you cut now? That is the big quandary. And actually, after the GDP numbers came, the bond yields went up by 5 basis points on Friday. So that's genuinely something which will roil all the consumption guys, autos, real estate, all of them will worry now, is the rate cut coming or not? That can be the dampener for the stock market point of view.
Oh, absolutely. Though, I saw some notes, some of the economists are quibbling, saying that second half may not be as strong. So maybe...
Almost everyone believes the second half won't be strong because, you had capex was complete, government capex was completely a first half thing.
Front-loaded, yeah.
And there won't be money, as, Prashant has been saying, tax collections in the second half are likely to look weak. So that will not come. Exports were front-loaded. Yeah. Base was very low in the first half. So, yeah, definitely we're not getting an 8%. But then full year is still going to be above 7.
Yeah. So, well, let's see if the RBI does want to oblige with another cut or not. We will have the answers by the end of the week. Thank you very much for that, Latha.